Trend following. This is one of your two styles of trading. It's characterized in several ways, which I'm going to go over now. I'm going to show real examples from the charts. What you need to know, first of all, is that a trend begins and ends the same way. That's one of your key anchors for knowing what a trend is. It begins and ends with what you'll call a change of character. So if we look along the bottom here, the red shaded area is price when it's not trending. It's in a range. It goes up all the way back down, up all the way back down, or something roughly like that. Then you get one of these up moves that goes outside of the previous range and doesn't come back. That's your first clue. The yellow line above that is where we see the change in character of this move. Then the trend commences, and the trend typically extends further than you think it's going to and doesn't give deep pullbacks for people to get on board. Once it reaches the top, it ends the same way that it started, meaning there is some level that should form a range or a low, and it breaks that level, much like it broke the level here, and then it goes into the opposite, a downtrend. That's very basic for how a trend forms. Let's look at it on the chart in two ways. Here's Ethereum on a daily chart, so a high time frame back in 2021. It went sideways for a number of weeks. It then went up into a trend with breaking above the previous level, the change of character, no pullbacks, one very shallow pullback, all the way up until it was done, came down. This could have continued to trend, and once that black line was broken, confirmed change of character, trended all the way back down. So very simply put, trend following is not about predicting when it's going to start trending. It's about, as the name suggests, following the trend. So you're going to develop a strategy that allows you to get on here or here or here or anywhere in the trend to capture a portion of the move. You don't need to go long here trying to anticipate a trend. That is where most traders make mistakes and where they lose a lot of their portfolio. No, you're still in the other phase here, mean reversion. That's not the time to be taking those type of trades. So look at it again. Let's go to a lower time frame to show you that this happens all the time on many time frames. You can see here that price was in a range, tight range, for a number of a couple of days. This is 15-minute chart. Then broke out, clear change of character, closed strong, well above the range, and then trended all the way up into a consolidation, which actually ended up trending even higher. Again, so when we get down to actually how to trade these, your job is not to catch this big move. Your job is to understand this big part of the move and say, is there a higher probability that we continue to go up? In which case I can get on here or here or here, and be diligent with your exits so that you can take profit. That is trend following. The lessons to come, after we've discussed mean reversion, are going to start to break down the different technical factors that you can use to spot trends and how to trade them.